Welcome to this episode of Views from the Top. I'm Angelina Kuznetsova, Senior Managing Director at Arma, and today I'm hosting Simon Black. Simon, we know each other well, but could you please give a brief introduction on yourself for our listeners?
Hi, well, first of all, thanks so much for having me here. It's great to be on the show. So currently, I am chair of the board of two fintechs, Honor Freak, which is a Pan-African payments network, ClearCourse, which is the leading UK vertical SaaS and integrated payments provider. And I'm also an advisor to Cleverbridge, which is a merchant of record solution for software businesses selling internationally, and also TrueLayer, which is the leading open banking platform in Europe. In my past, I've been a CEO of two payments companies over 16 years, PPRO, and before that, SagePay. And my earlier career was in both Europe and the US in management consulting.
Thank you. We have a few questions to run through, some longer questions and then a few short questions. I'll kick off. How different is life as chair compared to being in the hot seat of a CEO? What has been your biggest surprise in this transition?
I think the thing that surprised me most is actually how much I'm enjoying being a chair in particular. I think despite working with, great chair men and boards, particularly, running SagePay and PPRO, I had this view that it would be more of a lean back type role and focused on the board meeting and the process and the bureaucracy around that. And actually, my experience is that in a private investor-backed business, the chair can and needs to have an impact. The key is to do that in a way without disrupting the work of the CEO and the management team.
Second question is linked to what you just said. In your view, what is the chair's most important role in supporting CEOs, yet constructively challenging without meddling in day-to-day operations?
Yeah, I think the most important thing is to align expectations and have clarity on how the business and all the stakeholders are going to move forward. That's what I often find is missing. It's not because anybody's at fault. It's that investors are bringing a particular perspective. CEO and representing the management team, number one, are just always super busy and stretched. So spending time to align expectations can feel like a nice to have. So I think that's a key role that the chair can bring. Sometimes it might be initially bridging a gap, but what's important through various means is to bring everyone together. That can definitely means a lot of communication and a lot of one-to-ones and empathy and understand where people are coming from. And then looking at what's defined, whether it's a business plan, a strategic roadmap, an exit plan where there's investors involved, and does work need doing there on that framework to bring people together. And that's definitely something that I've been focused on so far.
As a chair and advisor, how do you manage potential conflicts that exist between founder CEO and shareholders, particular financial investors, when it comes to exit timing, growth versus profitability choices? And what advice would you give to any chairs how to handle these challenges?
I'm a new chair, so I'm not sure I'm ready to give advice to other chair yet, but I'm happy to address the question. I mean, absolutely, and also draw on my experience as a CEO, right? So, of course, there will be conflicts, and maybe a better word is differences of opinion and differences of views. I think when conflict can arise is when tensions are high, which might be that there's a big operational issue, which, particularly in payments can happen. Downtime or fraud incidents. It might be because financial performance is not where everyone would like it to be. So again, tensions are high. Or it might be, as we've experienced a lot over the last 2 or 3 years, a macroeconomic factor, right? And we saw, particularly in fintech, this massive swing in perspective on the environment and investor appetite. So lots of reasons why tension and conflict can arise. I think on how to address them, one, a point I already mentioned is just a lot of communication and in any walk of life, it feels like these days more than ever, actually having the strength to sit and shut up and listen to the other's perspective and try to understand the other's perspective, right, is a skill maybe we could all, have value going back to. I think when if you're a CEO, or a chair for that matter, and you're thinking of an investor perspective, I think there's a tendency, one, because investors are often asking about the number or the numbers, right? Can you cut costs sooner? Can you grow faster? Why do you need more money, right? So there's a tendency to see them as more of a two-dimensional numbers-driven figure. I think also people often associate the individual, the investor's representative on your board, maybe they're an observer, with the fund. And it's important to think about that person individually. What's their position in the fund team with respect to the investment committee? What kind of pressure are they under, right? Where might their emotions be? When did they invest and what was the expectation? There's this phrase investor fatigue, which, can sound like a cliche, but it's very real, and it's easy to think as a CEO, it's all on you because you and your team are trying to deliver and build. But there's a role the investor's playing in their organization. They're trying to deliver a return on an investment. They've got stakeholders internally to manage if things are going differently versus expectations when they're invested. So I think that understanding and empathy is super important. And then it's really, trying to have an open discussion on the difference. And maybe sometimes you have to agree to disagree. I remember in my own experience, an example around, how fast to cut, which I get it generally. I think it's probably true that managers, CEOs don't cut back costs far enough and often enough. But I had a particular instance around a technology investment, which was needed to complete a cloud transition, and without which we would have got stuck in no man's land and had, in my view, a depreciating asset. And that's fundamentally what we're all here for, is to create value and create shareholder value. So I think at that time, I wasn't going to get the investor on side, but at least we had an open exchange of opinions. I think what a chair can do in particular is make sure those differences of opinion don't create an ongoing friction. I think another thing I've seen is sometimes there's a constant discussion, like, every week or at least monthly, over what is a really strategic issue. Well, in no business should you be revisiting strategic issues, regularly. So those need to be taken off the table and addressed as part of a strategic review, right? It sounds really simple in practice, but it's often because almost like a sore has been created that someone's not letting go of. Why did we buy that business? Or look how badly it's doing. I knew we shouldn't have bought it. I never understood why it's relevant to the core business. Has our core business shifted? And again, it's not that someone, is blind to that and just doesn't want to deal with it, but there's other priorities. Time is an issue. But if you let that fester, that adds to that disconnect.
I just want to come back to the point you mentioned already, impact of economic environment. Following the period of cheap and easily available capital over the course of 19 and 21, company has faced substantial economic headwinds, which stifled growth, suppressed valuation. Payments companies been particularly impacted as a sector. What's your advice to the boards in navigating this challenge?
Yeah, I mean, first of all, I think boards have built experience now. It's more than 3 years since the environment began to change, and in I think most private tech companies, outside of where we're seeing new bursts of energy, some would call it bubbles, AI and stablecoin. I think outside of that, pretty much every tech company, big and small, has had to go through several rounds of cuts. And I think the area I'm most close to, fintech, I think boards still underestimate just what a transition, what a drastic change that was for CEOs and their teams. We went from an environment spring of 2022 where not only capital was readily available, but then investors were often, hey, why aren't you investing faster? Can we go quicker? What about adding another 12 salespeople, right? Could we expand into new markets faster? And within a matter of weeks, the same investors were saying, hey, did you get that Sequoia deck I sent you, which was doing the rounds, right? Or nobody regrets cutting too soon, too fast. And there's often talk of, there's a lot of people in roles of responsibility that have never seen a downturn before. But I had lived through several downturns, and it's still not that easy, right? You've set up your ship, for want of a better word, right? You've got your crew and you've got your direction, and you're going along. And I think the bigger the company, and I was running a scale up at the time, it can be harder to turn, but also, as I gave an example earlier with the technology investment I was leading at that time, it's not always clear cut, and just how deep you can go. So, but look, now most CEOs have come through the significant changes they need to make, but that doesn't necessarily mean the business is on a smooth track where growth is at a level where everybody's happy. And so I think the question was, what's the advice to boards given this change in the economic and investment environment, is to have empathy with what management are still going through. I think if you haven't already done it, and I say you because I think the board definitely has a shared responsibility with management. So if you haven't already done it, you need to take a fresh assessment of where you're at now, because assuming you've done with the cuts, the path to profitability is clear. Let's take a look at not just the strategy, but the expectations on all sides. What are the business goals for the next 3 to 5 years? How does that fit with potential return for investors, and bringing everyone together to align? And yeah, that's really key. And I actually see examples where that's still not the case.
Just to change direction slightly, spend a couple of questions on the industry. What do you see being the biggest payments disruptor coming? We have AI, we have real-time payment rails, we have payments and software convergence. And how do you think the payments landscape would look within the next 5 to 10 years?
Wow, thanks. I hope we have another hour. So yeah, let's start with a bit. First of all, of course, AI is huge. I think the biggest impact, like with most sectors, is it's a new evolution of computing. So as cloud computing changed many things and opened up new possibilities, so will AI. Directly on payments, the talk is around agentic payments. So you allow an agent on your behalf to go and make a payment. I'm not sure that's going to be really big in a near-term way, maybe for straightforward transactions. So I think it's good that activity is going on there, but I don't think that's the biggest change. Stablecoin is very significant and particularly impacting B2B and cross-border payments. And we see a lot, and I think there's a lot of good coming out of that. One of the main impacts in the near term will be simply that money moves faster, and this is a positive. So I would link that to the real-time payments changes which are going on, and particularly we've seen huge changes in Brazil and India, Poland. I was reading about Hungary this morning, which has a new regulator-backed, instant payment scheme, which is getting traction. So the whole movement of money is becoming instant, even across border. And that's a good thing for business and commerce generally, right? Because cash flow is so critical. The area I'm most excited about is actually where software and payments start to blend together. And I think there's two things I would highlight there. One is simply integrating the payment process with software. And that's to make, in a B2B setting in particular, it will make reconciliation easier around accounts payable, accounts receivable. It will reduce errors, increase accuracy. I had to chase a consulting bill this week, and I'm like, how can this happen, right, in this day and age? So we're still, and this is for a software company, who's my client, and we're still seeing antiquated processes where, they attempted to make a payment, which was, I think, around 8 weeks after I'd sent the invoice. So why 8 weeks, right? Maybe that was intentional, but it wasn't intentional that they hadn't realized that the payment didn't go through. And this is just a lack of integration. And this takes time. So there's huge efficiencies to be made. For consumer payment acceptance, We're seeing a lot of that there. Europe is still behind the US in terms of penetration around integrated consumer payment acceptance with a piece of software. But that's something I'm directly involved in through my chair role at ClearCourse. And I really see firsthand the benefits to businesses as well as to the consumer. Increases trust, there's less friction, it's a faster transaction. And there's a lot further we can go. I think last point there, slightly outside of payments, but I think what we'll see, you asked how do you see the payments landscape 5 to 10 years? I think the role of banks in terms of serving retail customers, corporate customers, is going to change radically. And that's because of the blurring between software and payments and banking. And what's ahead of us is a period of time where, in many countries in the world, the shift from cash to digital has largely happened, right? So, okay, but now you've got digital payments everywhere. What are the new possibilities? Particularly for younger generations, using a neobank or a digital bank, it's happened. It's not news anymore, right? Revolut's huge. Monzo in the UK is huge. Nubank in Brazil is huge. So when your primary banking relationship is with a digital platform and payments are all digital, now you talk about integrating, say, for a consumer, a budget management app or wallet, or for a business with accounting software. Like, those lines are blurring. And going back to the first point, AI will fuel the speed of development. And I think you'll see, like Stripe is also a software business. Offer billing, you'll see what are today regarded as banks also becoming software businesses. So quite how that looks exactly in 10 years, no one knows. But what's for sure is going to be very, very different.
Yeah, I think having been following payments industry for over the decade, the evolution's been absolutely exciting and interesting, and there's more to come. I'm going to move to 4 quick questions for you. First one book, podcast, memo, framework you recommend to new chairs?
Well, I love business, and it was hard to find a good business podcast. Now I'm going to have a new one, View from the Top, supported by Arma Partners, to add to my list. But In Good Company is a great business podcast, which is hosted by the head of the Norwegian Sovereign Wealth Fund, who are massive investors. I think own something like 1% of the world's public stocks. But on top of being successful and smart, he's a really good interviewer. And they have top CEOs and experts, and so In Good Company is definitely a favorite of mine for general business insights.
One metric, KPI, that you'd never run PE/VC-backed company without?
It may not sound startling at first, but what I would really focus on or even dissect is year-on-year like-for-like growth. That's really the thing to keep the eye on and not get misled by, say, a price increase, or you might have existing customers where their business is growing. There might have been reasons for those accounts expanding, which are not a lot to do with your sales or go-to-market motion. So really dissecting year-on-year organic growth and what are your sales and marketing teams proactively delivering? What are new products delivering? Do you have the right campaigns? And how are you doing with respect to competitors?
Slightly controversial question. One board practice you would abolish that would improve speed, quality of decisions?
I think people calling me Mr. Chairman definitely needs to go. So one board practice I would abolish. Well, I don't know about abolish, but I really try to minimize the formalities. I think, particularly in a private company, what management want and board should want is to maximize the amount of value add you can deliver in a meeting. So I think maybe the thing to try and abolish is perfunctory information updates. I think for that to happen, you need all of the board reading all of the materials ahead of time, but that's what we aspire to.
A CEO trait that's non-negotiable in a PE/VC-backed company?
Well, I think a number of traits are key. I mean, the one that jumps to mind as a non-negotiable is resilience. I think, private equity, venture capitalists are investing because they see a lot of potential, but to deliver high potential, you're going to have to go through a lot of challenges. So definitely being resilient and not just sticking the course, right? But I think part of a CEO being resilient is doing that with continued energy. I mean, I know I speak to CEOs who've done this. I did it more than I would like to, where you've come out of a meeting or a call, which is like you've got some really bad news, like, major setback for the business or big issue. And then you're going straight into an all hands and you're like, hey guys, here we go. And you can't share what you've just learned, right? It's too quick. So you've got other topics to deliver. You've got to have the energy. You've got to inspire others. So being able to inspire others when inside you're like, you've just had a setback, a knockback, that's just one example of the kind of resilience a CEO needs.
Thank you, Simon. Thank you very much for your time and a very interesting, insightful discussion.
Hey, thank you. It's been an absolute pleasure.
And thank you for joining me, Angelina Kuznetsova, Arma Partners, and Simon Black for this episode, The Views from the Top, the Arma Partners podcast. Please tune in for further podcasts from us.